Does anybody know what's going on with the stock market? Do you know? Are you confused? I'm confused. To me, it sort of looks like the risk markets are trying to go higher in healthy relationships, but things don't look so good when you get into the details. Let's look at the market action this week to see what we can see. So if we look at the markets a week ago, you can see that a week ago on February 24th, looking back at the prior week, the markets were very unhealthy. You can see that ARK Invest, the riskiest set of stocks, finished the lowest for the week, followed by the NASDAQ, and then followed by the S&P and the Dow and small caps. This is a very unhealthy looking stock market. So let's fast forward to today, this Friday, and how did this past week look? Well, you can see that the week started out kind of not very good, but then in the last 2 days, we've had a very interesting rally here. ARK Invest, the riskiest basket of stocks, has been shooting up here, while everything else is kind of going up at the same rate. It kind of looks to me like everybody's skipping the main course and going straight for dessert. This just doesn't look right. And what about if we look back over the past month? Well, you can see that things have been pretty unhealthy here. ARK Invest finished the lowest for the last month. And again, everything else, NASDAQ, small caps, S&P 500, they're all bunched together here like they're one index, and we know they're not. This just doesn't look right to me. It just doesn't make sense. And there's other things that I'm going to show you that aren't making sense. I'm not convinced yet. And if we look back over the last 6 months, we talked about that this was an unhealthy rally here with the Dow going up the most. We had a very unhealthy falling market here with ARK falling the most. Then we had a very healthy rally attempt here where ARK went up the most, NASDAQ went up the second most, and the Dow was basically flat. And now we've got an unhealthy market again. This is a real roller coaster ride. And what about our current bottom dynamics? This is one area where I don't agree with what I see in the markets. The markets, yeah, they kind of look healthy on the surface, but let's look underneath the covers here. They don't look so good. So we had a bottom forming indicator back here, a very reasonable one, not a very strong one. You'd like to see this bottom forming indicator up here at 100% for some length of time with a very high confidence level. We got a very brief bottom forming indicator back here. But what's happening now? Well, the bottom confirmation indicator is starting to shoot up. Why? Because stocks are kind of going up. But look at what's happening to the confidence level. It's falling. This is not looking good to me. This is not saying that this is a confident rally that we're seeing. It's not a confident rally. Now, this could turn around. I hope I'm wrong. But right now, I don't like what I see. And what about if we look at risk versus opportunity? Well, if we look at risk versus opportunity, you can see here that risk acceleration is through the roof. I mean, it's up here north of 80, which is not good at all. And in fact, it went up today as the markets went up. This does not look good at all. And risk in the red, that's moving up higher instead of coming down. So this is really not a good look here, even though we had a rally in the last day or two. Okay, we're back, Jack. And what about equity versus safety? Well, you can see back here on February 10th, we had a fairly healthy equity market, although cash was coming up here in the third spot, which doesn't look good. And in fact, you can see the next week, cash was ranked at number 1, really not good. Last week, cash ranked at number 1, not only cash, but T-bills and intermediate treasuries ranked 1, 2, and 3. This is looking fairly unhealthy. And now you can see that we've got cash, gold, and T-bills ranked 1, 2, and 3. Now, stocks are in somewhat of a healthy relationship here. Small caps and the NASDAQ are doing better than the Dow and SPY, but you don't want to see those below cash, gold, and treasuries. In fact, what we are seeing now finally, you can see we had an unhealthy Treasury market back here, and back here. And now, finally, we have a more healthy Treasury market with these longer-term Treasuries, EDV, outperforming TLT 20 years, which are outperforming intermediates. This is starting to look better for Treasuries, but it's just starting. And how does all of this show up and play out in the buying and selling pressure? Well, if we look at the Dow Jones Industrial Average, you can see it really shot up here in the last day or two. And the buying pressure is a little bit above the selling pressure, but it's falling as the market's going up. That doesn't look good. What about the S&P 500? Well, you can see that the selling pressure is well above the buying pressure, even though it's going up here. And yeah, they're getting closer here, but this doesn't look good either. And what about the NASDAQ 100? Well, again, this orange line, the selling pressure, not only above the buying pressure, but it's moving higher as the NASDAQ went up. This doesn't look good. Russell 2000, now the Russell 2000 looks a little better. The buying pressure, the solid gray line, is above the selling pressure, but you can see that it's faltering here as the small caps were moving up. And finally, what about ARK Innovation? Well, ARK Innovation looked terrible back here. You can see how strong the selling pressure was. Now it has collapsed, and the buying pressure is just about to move above the selling pressure. Like to see that continue, but I'm not so sure it will. I really don't like the dynamics of what I'm seeing here. And what about sector rankings? Now remember, these move a lot more slowly than equity versus safety, and they move a lot more slowly than the buying and selling pressure. These are going to shift much more slowly. It's sort of like turning a big, huge boat like the Titanic. But you can see, okay, technology is still ranked number one. Emerging markets are up here. Yep. Gold's up here. So this looks fairly orderly, except consumer staples are still ahead of consumer discretionary, which doesn't look good. But if we look at the sector acceleration rankings, now it's a different story. You've got gold and cash and 20-year treasuries and intermediates and shorter-term treasuries all up here at the top. You don't want to see those here. This is not healthy looking at all. And you can see consumer staples is still well ahead of consumer discretionary. This is not a healthy looking stock market, guys. And what about the treasury markets? How do they look? Well, they looked pretty horrible up until Thursday. And then you can see right at the end of the day, Thursday and into Friday, the longest duration, highest risk treasuries moved up dramatically and kept moving higher. So this looks actually pretty good for treasuries. I don't know where it's going to go, though. And what if we look at the inverted yield curve? Well, last week, the inverted yield curve was inverted by 81.51 basis points. And guess what? This week, it got worse. It's not getting better. Now, look, if you've seen some of my earlier videos, I talk about the fact that an inverted yield curve doesn't necessarily mean we're going to have a horrible economy with really high unemployment. It just means that things are going to be a little tough, possibly, for a while. But I don't like the way this is moving. This needs to correct itself, which means the Fed has got to either start lowering rates on the short end, which they've clearly said they're not going to do, or at the long end, those rates have to go higher, and that's going to be a problem of a different kind. And how do they look when it comes to buying and selling pressure? Well, kind of like the equities did. I mean, look at this. The selling pressure just moved up here, even though we had an up day on the 7 to 10 year intermediate treasuries. This doesn't look good. What about 7 to 10 year sort of intermediate to long treasuries? The selling pressure is shooting up as the price moved up here. This, again, does not look good. And what about long bonds, 20-year treasuries? Well, you can see the selling pressure has stayed stubbornly above the buying pressure here. Although if the trend is down and the buying pressure trend is up, but again, I'm not convinced here. This is not convincing. What about gold? Gold is the only thing that's looking decent here. You can see that the buying pressure has been moving higher here, crossed above the selling pressure as the price is going up. That's a healthy look. You've got rising buying pressure and rising prices. That's what you want to see. And what about Bitcoin? I was kind of hopeful for Bitcoin back here when we had this little bit of a rally, but you can see that the selling pressure has continued increasing here, and this does not look good. So look, what's the bottom line? I'm not convinced we're going higher from here. Yeah, we had a healthy stock market rally today, but the signals are still mixed, as you can see, and I'm not buying in at this point in time. For our part, we're going to keep our client portfolios hedged until we see definitive signs that the storm has really passed. Hey, look, I hope I'm wrong, but I'm just telling you what I see in the markets right now. And it doesn't look good. I'm Calvin Rose, and thank you for watching Invest Smarter. That's all for now.